Okay, I'm gonna start. So today's topic will be on common mistakes that are pretty much fatal for a lot of home buyers, whether you're a home buyer or investors, as long as you're buying a property. These are the common mistakes that a lot of people they tend to make most of the time due to misinformation and then also common misconceptions about the market, and hence it has become very common lah. But it may not be an ideal thing next time when you want to exit your property. So let's see. So first of all, I think before we even begin looking at property, right, it's very important to know what is your objective. Whether you're going to buy it for your own stay, right, strictly own stay. So if that's the case, you can, most of the time you can just choose wherever you want. It doesn't really matter that much, because you must also accept the fact that there is no, it's because you want to stay where you want to stay, so there is always a risk, and most of the time there is quite a bit of risk of running a loss next time eventually we exit, whether 5 years down the road, 10 years down the road, 20 years down the road. There is a likely chance for you to incur a net loss lah, I would say. Okay, why? Because if you want to know why, go and look at my other videos of the hidden causes of owning a property. And then if you're going to buy for investment, then you will be looking more at numbers and not just the common hearsays, which is where we are, why we are here today, because you want to know a little bit more about the market. If you're a home buyer just buying for own stay, then actually you can skip this video. It's not going to help you much since you're going to just buy wherever you want to stay. Okay. Generally, there are three stages of, or rather three main buyers of property. The first one will be home buyers, which will be the ones, like I mentioned just now, they want to buy where they want to stay. So it doesn't matter whether they are going to make money next time down the road, which in this case will be the easiest. Okay, you can just buy wherever you want. It's just going to be near MRT, that kind of thing. Pardon me, I got a little bit of running nose because was tidying things. Then I think my sensitive nose started kicking in after some dust. So pardon me on that. And okay, so home buyers, I generally think that there is not much stress because you just want to buy wherever you want to stay. Then if you are moving more towards the investor point of view, if you are going to be the investor, then you have to be very careful about numbers. You must be really interested in numbers, because if you are just buying based on hearsay, new launch is going to be, all the new launch is going to make money, and then all the resale or whichever resale is going to make money, you must buy freehold, then there's a high chance that you're going to incur net loss in the future. So this is the level difficulty of middle, because you're not going to stay there, so you don't have to be that emotional. And then the highest level of complexity is actually those home investors. That means those that want to buy for own stay home, and then they also want to invest. That means they want to stay where they want to stay, and then also want this property to make money in the future. If that's the case, it's going to be very, very, very tricky, because there are a lot more factors than just what the typical investors will have to look for. And most of the time, the home investors won't be able to find something that they will perfectly be happy about. Like, for example, near MRT, and they have highest potential of capital gain. In today's market, is really, really very tough. Okay, and if you are banging on Pasir Ris 8, having example for those people who rush into Pasir Ris 8, if you're banging on making big bucks from that just because it's near MRT, I really don't think it's that simple. Okay, so the first mistake that we are going to highlight today, it is a common mistake that let's say most of my friends and relatives also simple. They just go to property guru. Oh, I'm going to start looking for freehold on 999 years, and because what's going to happen? Singapore property prices are going to go up, and the freehold confirm go up, so just no need to bother because it is so simple now. They just go to property guru, go to 99 select freehold 999, and this is the typical filter that we tend to use. For example, we don't want to look for a home that we want to stay, but we want to protect our dark capital downside. Then we just go to the filter, put below 1.5 million bedroom, maybe 3 or 4 or 5 bedroom, and then floor size is you want very big 1,500 above 1,005 square feet okay, and then freehold and 999. And if that's the case, Then you have things like this, lor. How many of us actually heard of this sunny flora? I think I haven't heard of this until recently. Until today, I decided to screenshot this. Of course, there are a few others that I don't bother to include, but generally there are those that Azalea Park, Edelweiss Park, and then also Dahlia Park. So I've compiled them together. And also one more Sembawang Cottage. And if you take a look at these are the ones that probably Google whip out for me. Okay, the sunny flora. If you take a look at 2013 onwards, okay, later the next part I'll tell you why we look at 2013. It's very important to look at things from 2013 onwards. Okay, not because it's just a pig, it's not as simple as that. So if you take a look at this, if you got in here, what would happen? Your money would have gonna go where? For Sembawang Cottage also, it would have gone down. For Edelweiss Park also down. Dahlia Park Green also down. And then you have Azalea Park, the blue one, pretty much the same. So that means it took a time of almost 8 years for you to get back to where you were. And don't forget, we have things like remember, a quick recap, buyer stamp duty, you have your agent fee, and then you got a legal fee, and then your interest rates, and then your maintenance. So, and then also property tax. So all these things add up. Easily remember, we talk about at least you want at least 100K and above in order to cover. With all these, do you think it's possible to hit 100K? Okay, I think this is something that we really need to be really careful about. It's not as simple as just going to Property Guru or 99Co and then just select freehold 999. It's really not as easy as that. Remember, if a real estate is going to make you $100,000, $200,000, $100,000, and it's just as simple as going to the portal to just filter down to this criteria, then there will be no chance that anyone will be losing money at all in today's market because it's so simple. And really because it is not so simple, and that's why a lot of people lose. A lot of people lose money. So it is very important to not fall into the trap of thinking that buying property in Singapore is really that proof. Okay, you must really do your due diligence and then really go and learn more about the market. So this is where I'm talking about using 2013 onwards. So a common mistake is that people like to use, or rather a lot of agents you approach, they will tell you, oh, 30 years ago, if you buy this property, you would have made a lot of money. And then 10 years ago, if you bought this, you would have made a lot of money. And actually, in fact, if you go and buy HDB last time, 20 years ago, you would have made money. But now, if you may buy a HDB resale, what are the chances of you making money today if you buy? Let's say today you buy at an inflated price resale. Chances of you making money, I think, is tough after buyer stamp duty, after all these causes that we mentioned. Okay, so why do I talk about this? If you take a look at the generally freehold and leasehold in Singapore, the difference, you have a 99-year in this 99-year is the blue one, and then the freehold is this one. So a lot of people will say, this whole will make 45, 48%, so it's more worth it. Okay, that one we'll talk about that first. But if you notice 2013, there is the TDSR, the total debt servicing ratio, which basically means that all our loan is only limited to 60% of our income. If that is so, that actually limits a lot on how much you are able to borrow, and hence this killed the market. And hence you realize after 2013, the market went to a standstill for quite a while until 2018. Then it surpassed the 2013 peak again. Okay. And so if I change this chart to an 8-year chart, that means after 2013, which was what I call the mother of cooling measures, you realize from 31% and 48%, it has dropped down to 14 and 17%. And this is talking about general market trend. And one more thing, based on this, there's a lot of times that people like to use general trend, but it doesn't mean that general trend, you buy any property in Singapore, you'll make money, because remember, freehold here says that, the past 8 years has made 14.88%. But remember, just now we just showed you, is this a 14.88%? Is it that simple? Okay, so just an example, it doesn't mean all is doom and gloom. And then we also, just one example, I'm not going to bring up the name of this condo. If you really want, you can go and ask me about it. But I'm not going to show here because all these are confidential research. Okay, so you just got to do your homework. This is a freehold condo. Not to say that all freeholds are losing money. Just now I show you quite a lot of freeholds that are not making money. This is one example of a freehold that has made money over the past few years. So I don't look at this one. If I look at this one, it's going to be a lot more percentage of increase. But I just look at 2013. After 2013, look at how much it has increased. It has increased a total of almost 31%, which is a lot in real estate terms. Because if you are looking at let's say a $2 million property, 30%, 31%, which is like, it will be almost 620,000 profit. This is significant. Okay. If we take a look at the guys who, okay, so just now, like I said, after 2013, I will take into account the transactions they bought after 2013. So these are more accurate and more relevant to today's market. This is the amount of profit. So does it mean that a lot of people are still saying, real estate market today cannot make money? Can. But these are the people who either are very, very, very lucky, or they really manage to dig in and do the homework. On the other hand, this is another condo. This is the same condo as just now, the blue one. On the other hand, there's another condo that is just very, very, very close to this condo. Within walking distance, definitely walking distance. I think 2-3 minutes can walk already. Freehold also, but the characteristic is like this. Price trend has went down instead of going up. How come so different? And then it's not definitely not because of location, because they are just 2 minutes apart from each other. Hence, is it that simple? Then we don't just look at freehold. We look at one 99-year condo, quite a new one recently, launched in 2015. And then it has went up by almost same, almost 31% over the past few years. In just a matter of 6 years, less than 6 years. Okay. And look at the amount of profit that they made. Very healthy 6-digit figures. So these guys definitely have more or less guaranteed made a profit. Whether they have stamp duty, no stamp duty, they are definitely making a profit. See, they bought at 800 plus, 900 plus, and then they offload at 1,002 plus. On the other hand, this is the same 99-year leasehold condo that we were talking about just now. And just within walking distance also in the same location, there's another condo that didn't make the same amount of money. But on the other hand, only made 1%. Is it 1% enough? Is it going to reduce your costs? Definitely not, because your buyer's stamp duty is already 4% minus 15400 for anything above $1 million. Okay. So you can see the difference. The difference in just because it's the same location doesn't mean you will guarantee very, very same price trend. We must take a look a lot at the macro perspective, the macro fundamentals. Is it fulfilled? And there are a lot of other factors that come into play. And how many of us are able to do that very quickly? If you take a look at the property, okay, so today I buy at this price. What is it going to be like 10 years later? What are the external factors that are going to be affecting my future price patterns? Okay, all these we must be able to recognize. If it's that simple, remember, then everyone will be making 6-figure profits. Mistake number 3, it must be near MRT, which is the most common hearsay. I say everyone say, it's to invest, I must be near MRT, I must be this, I must be that. So I think, to be honest, if you want to buy a property for investment from a renter point of view, that means you're not making capital gain. You just want to rent out easily. Then by all means, go and buy the near MRT, because very easily you get tenant. Because most of the tenants, they don't want to drive. They just want to get an MRT. Okay, but if you want capital gain, then it's not going to be that easy. So I see it very similar to stocks. In stocks, we have dividend. And then in stock market, in the property market, we have your rental income. Okay. And then some stocks give you maybe the conservative one, 2 to maybe 4%. And then rental also can be 2 to 4%. So I would see it as quite similar. Whether you want to go for the dividend approach or you want to go for the capital gains approach, it's really up to you. Okay. And these are some of the guys that I found. 5 guys, I especially selected them in different areas. This is the northeast, and then this is the more central. This is also more central. A little bit more towards the Fire Road that side, a little bit more towards the south. Okay, and then you have north, and then you also have east. So quite different places. If you take a look at this, Gilstead 2 is very close to, it's really quite close to Newton MRT, and prices went down. A Dilliden at the Farrer Road side, if you take a look at 2013 level, which is around here, 2013 June, that was when the cooling measures came in. So after that, till now, it has pretty much stagnant. Does it mean that buying near an MRT project is going to make money again? Remember, blue color, we have Sengkang, which is at Campus Heights. So if you enter at this point, today you will be making a loss. I mean, on an average, all these are average prices. For Tanah Merah at Urban Vista, if you enter here today, definitely you will still be making a loss. Also, for central residences, we touch on this on some other videos, but I'm just going to run through quickly again. You went up over here and then it's still down. So does it mean that buying near an MRT project, does it always guarantee profits? I really don't think so. It's not that simple, like I said. And on the other hand, I pick up 5 other condos that are far from MRT. A lot of people, if you tell them to buy here, they will tell you the first thing, wow, so far from MRT. It's not convenient at all. Next time my kids cannot, I don't feel safe because it's not so close to MRT. On the other hand, if you take a look at the price pattern, since 2013, this guy went up. I'm not going to show the names as usual because I don't want to share my research so easily. I only share them confidentially with my clients. So I'm still showing you this. I'm showing you that it doesn't mean that it's near MRT that you can make money. There are a lot of projects that are not near MRT at all. Even if you want to walk, I think more than 50 minutes kind of walk, and they still make money. And out of these 5 of them, 3 of them are leasehold, 2 of them are freehold. So I try to dig out something that is more equal. We don't just say leasehold make money or freehold make money. We have quite an equal distribution of both . And then you look at all these make money. A yellow one went up, and then the light blue one went up, and then the green one also went up, purple one also went up. So all 5 of them make money. Okay, so does it mean that it's always near MRT then make money? I think we really need to rethink this if we are going to seek success in a property market. There is a lot of these common hearsays that we need to start dispelling in today's market. So mistake number 4 is that a lot of people think that resale is cheap, and they think that cheap is good. So just a simple question. Next time, if you want, let's say you want to buy a car, okay, and then you go to the shop, and then the guy can tell you, hey, today we got a new car, and then this car only costs us brand new 10 years, $20,000. Will you feel secure? Will you feel confident of buying the car? I think chances are the first reaction will be, why so cheap? Sure, no, something must be wrong, right? So that is the thing. When people come over to real estate, they totally switch the other mindset. They say, wow, this is so cheap, this is good. Then I'll go to probably Guru, the PSF so low, and it's freehold some more. Don't you find something is wrong? If it's so cheap at this in today's market, whereas the new launches are so damn expensive, why is it so cheap? Okay, I think we really need to really reconsider that notion. Quite a common comparison. I put it out before, but I'll just quickly run through this again. Seaside residences went up 2.0. We just look at 2017, 2017 Q2, that was where it first launched. So we just look at here. So Villa Norina went up a little bit. I think it was about 900 plus, and then went up to slightly over 1,000, which is not to say that they never make money. They did make a little bit of money. But seaside residences, they launched about 1,007 plus, and then they settled at around 2,000, which is quite a lot, isn't it? All you need to do is just move 300 PSF, and then for 1,000 square feet unit, That's going to result in $300,000 profit, isn't it? Whereas maybe the same guy over here, he moved 400 PSF and then he bought a 1,000 square feet unit. How much is he going to make? 100K. So probably break even, right? Or maybe a little bit of profit. Okay, let's take a look at the actual numbers. Well, remember, we only look at 2017 to be fair, because this guy only came in 2017. The amount of profits that this guy made, and some of them, one of the top four is actually a two-bedder. This guy made all these guys made as much as $600,000. There are some people who still lost money, maybe because they had to offload, they had to sell it way beforehand because of whatever issues, family running out of money during the COVID crisis or anything. But these are very, very small minorities. 44 transactions profitable, and then 2 transactions that are unprofitable. Villa Marina, 98 transactions, but out of these 98, I only look at one. Why? Because remember just now I mentioned this guy was bought only in 2017. So I only pull out some guy that bought it after 2017 to be fair. All these guys bought before 2017, so I'm not going to look at them. This guy, same also, not way before 2017, so I'm not going to look at it. So the only guy over here, he only made 60K. And what happened to the rest? There are a lot of people who have been buying over there all these years, because all these guys also bought, but did they sell? And okay, maybe some of them, they really like the place, they don't want to sell. That can be one reason. The other thing is that if you buy a stock, okay, let's say today's stock, you bought, let's say SIA, and then you realize that you plonk maybe $20,000 in, but today you don't need the money yet. What will happen? Are you more likely to hold or sell? If you don't need the money, most likely you are going to hold, right? Which is the case for most of these owners at Villa Marina, because they realize that, hey, I'm not making money, but no matter, I just hold. But if Villa Marina went up by 400 PSF, what will happen? And imagine if your SIA went up by 2 times, what will happen? Most people will end up selling. But why are they not selling? Because they are not seeing profits. Okay, so that's why you only see one guy over here who cashed out this. And based on my calculation, he just barely break even after buyer's stamp duty and the legal fee and everything. So next one is, since we resale, cannot, so-called, you would say my ITT resale, you say cannot buy, then new launch buy, man. So I'm also here to say that, unfortunately, not all new launch make money, because I recently, even till now, I'm hearing, hey, my new launch, right? All new launch will make money, right? It's not there. Okay, no matter how people are painting a picture, I'm not telling you based on this, that, or you should, based on this example, you must buy a new launch. It doesn't mean that way. There are a lot of other factors involved. What I'm trying to say that it's not as simple as just price difference. It's not as simple as near MRT, not near MRT. It's not as simple as the price gap between you and the old one. There are a lot of other factors that you must be able to recognize right from the start once you look at the property. What are the possible reasons influencing why a certain property is not appreciating, or rather have very little potential to appreciate in the future? So let's take a look at something that's a little bit older. So why I pull out something that's a little older? Because I want to observe how their price trend, is like for the past 8 years, especially after the cooling measures. So if you take a look at the blue one, which is Switch at Newton, well, these guys were completed after 2016. So they are still quite new. This guy went down, echelon launched around here, and then I want to take a focus more here. After the TDSR went down quite a bit and then come back up again, generally it's still on a flat. So that means running net loss. In other words, because all these are before causes. Here, also, if I'm going to take this part, then it is also flat. The last one, Water Town, also flat. So all these guys are running a loss, isn't it? You realize I haven't been talking about A. St. Thomas because this guy is the newest around here. The only launch in 2018, and look at this, the amount of money. This is the one that is the scariest. Imagine if I get in here. Remember the common hearsay also, another hearsay which I'm not going to talk about today. You remember first day, launch day, ballot day, go and queue up, go and buy the best price because the best price is on the first day. Poor guy. Okay, I'm thankful I don't have to bring any buyers here for 8 St. Thomas. Poor guy. Because now he will be kicking himself. 3002, and then 2000, what is this? 2006? 2006? Okay, I think it must be feeling quite sad. Either that or he can't be bothered because he got too much money. Then I pull out 8 St. Thomas here again because I want to give a reference on how much the price have moved in the younger crowd. So these guys are pretty much still building. Just now I show you all these have been completed. All these are still building under construction. So 8 St. Thomas is the oldest guy over here, came down. This petite Jervois still generally came down. Jervois treasure went up a bit, came down again, now no transactions. Neon still generally down from the first day. And Coastline also down from first day. Does it mean that all new launches make money? I'm not telling you that new launch cannot make money. I'm also not saying that resale cannot make money. What I'm trying to say that there isn't as simple as freehold or 99, resale or new launch, near MRT, not near MRT, because there are a lot of other factors that most people would not have noticed. So mistakes number 7. Number 6, we have people underestimating renovation costs or overpaying. What do I mean? This is more for unrenovated unit. And this one is more for renovated unit. So how do I mean? Next one. For example, let's say this listing over here. Okay. For example, this listing over here, which I'm not going to show the name. So because I mean just an example. If this owner is going at Watertown is selling at this price, which is about 1,007 PSF, and the average transaction price is around 1,004. And to be honest, I think this is a very nice unit. I really would love to stay in this place. I don't mind because you have unlocked view, everything. It is a very nice unit, to be honest. Okay, minimal, not too much, not too excessive renovation. Very nicely staged up unit, everything. I must say that the agent did a very good job. But the thing is, look at this 1,007 PSF and average transaction prices for Q3 in Watertown is only 1,004. You see a difference of 1,300 plus PSF. And let's say the owner allows you to, negotiate until 2.3 million. Based on the square feet of this, 2.3 million. Okay, so let's say 2.3 million. You divide by 1,367. It's going to give us 1,682. 1,682 PSF. And then you minus this, that means you're paying almost 280K, almost 280 PSF extra there for a renovated nice unit. And I think that is a trap that a lot of people will fall for because they will go in the unit and they start feeling emotional. Hey, I'm going to stay at this place only 3 months from now. And I say I'm going to stay for 10 years, 20 years. I know why I pay a bit more because today's market new launch is so expensive. All the new launch are like, last week can sell 2,000 PSF. So I stay at Watertown. Everything is there already. No need to wait for you to build. I can stay now. Why not? I pay a bit extra. And if you take a look at a $2 million property, a 280 PSF is times 2, is times 200. Okay, so times this amount, 280 times 3. You're paying 300,000, 380K extra for a nicely renovated unit. Okay, how much is it gonna cost you? If let's say this, maybe if you really want to do a nice renovation, 150K to 200K. So aren't you paying that extra 180K? If this is the case, will the resale be a good deal? Because remember, now is a seller's market. If that is a seller's market right now, are you able to snag a good deal? How do I know whether it's a good deal? If this is the market today, I want to enter here or you want to enter here. I think answer is very obvious. Which one is safer? Do you want to enter here or here? So the other thing is, if let's say you don't want to, okay, fine. You are saying it's very renovated, very nice. So I shouldn't overpay for it. And then so I can buy a lousy unit. And if I buy a lousy unit today, maybe at 1,004 PSF, how much am I gonna spend? Maybe I want to redo everything because it's a lousy unit. So I'm gonna spend 200K. If I spend 200K on 1367, that means actually I get in how much again? Short-term memory 146. That means I get in at plus 146,355 155 155 PSF. Right? This is my entry price actually. That means next time I need to factor in all this. I need to sell next time at above this price and also probably this price in order to break even because I still got I buy stamp duty and interest and blah 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 that I mentioned just now. Okay, you realize how dangerous it is that people don't understand because they think that it's cheap compared to today's market. But cheap doesn't mean there's value, and expensive doesn't mean there's value. It's like, why do people buy a Mercedes car for $200,000 when you can just get a Toyota car at like 80, 90K? You can get 3 of them, the same car. Of course, I'm not saying some people want to buy a car, no problem with that. Some people want to buy a Mercedes, no problem with that. But ultimately, it really depends on your priorities. Which one is more suitable for you at your life stage? And the last one, mistake number 7, I think a lot of people nowadays, because you have all the information available online, you have things like Stack Homes, things like Property Guru, Nyco, you got SRX, you got all kinds of things. So it is not necessary to engage a trusted professional in the field. Why? Because I can do it myself, because a lot of buyers are worried. Like, come on, if I engage your agent, then this agent tell me, you must buy now. This is a good deal. That one is a good deal. Everything is a damn good deal. So how am I going to decide? I'm going to get confused. So guess what? I'm just going to DIY and then screw it. I'm just going to do it myself. Okay. So there are a lot of DIY buyers right now. But remember, what is your profession? I think it's important to recognize that whatever profession you're in, even if you read up a lot on the market, are you going to be as adept in the property market as somebody who is full-time or a part-time? Remember, okay, let's say you are a dentist. Your profession is what? Is more in trying to fix all these problems coming in for your patients, or are you actually more adept at the property market? And also, if you want to go to a court, will you go and never mind, a lawyer fee very expensive. So why not? I just go and speak to a judge myself. I'm going to defend myself. Since lawyer fee is so expensive. Recent case, So Ray Yong's case, legal fee $100,000 for an HD guy, and that's even before his own lawyer fees. So if that's the case, then why didn't that guy go and defend himself on his own? But why did he even engage a professional? The same goes. What happens for stock market? Even for myself, I'm guilty of this. Read some information, read some Warren Buffett books, value investing, blah blah blah. Okay, guess what? I'm ready. I'm all ready. I'm not going to buy this bullshit from all these analysts or what. I'm just going to do it myself. Guess what? Okay, the market, so hot. Okay, never mind. I just ride the wave, and guess what? I bought here, and guess what? Pom comes out. Never mind. I sell. Oh shit, went up again. Has this happened to any one of you? I think it happened, right? It has happened to me, and I'm guilty of this now, I'm sure. So I prefer to stick onto my specialty and probably let somebody who is more capable and more full-time, that somebody that I can trust for this market to handle my assets for that. Okay. So at the end of the day, I'm not saying that you should really go and trust any other agent. You really need to filter and talk to people that you can really trust, and then see whether their point of view and their research resonate with you, what your beliefs are. Of course, don't just think based on that. You just say, okay, my belief is still that near MRT is the best. Then okay if that's the case. And then the numbers that you see somehow all supports that. in recent numbers, I'm highlighting recent numbers, then by all means go ahead. But I think if you want to go that route, it is very important to be very adept when it comes to numbers. Okay, instead of just going by your emotion. Because remember, if you are an emotional buyer versus a logical buyer, which one is more likely to make money? I think most of the time is this guy, right? Objective and logical. Okay. So nowadays, I think the key I want to drive through today is that it's not about common hearsays. It's not about whether you like or dislike having an agent around. The most important thing is you must be able to find someone that help you to understand the market. Because today we have, honestly, almost everyone is singing the same song. Like, oh, this is the top of the market. This is the top already. This is the peak of the market. So, and hence, it is not worthy to enter the market at this point. So I'm not saying enter the market right now also, but remember there are also some other key things that you realize that the government is not trying to cool down the market now, because we have things like construction delays because lack of labor. And we also have foreigners, a lot of foreigners still not coming in to buy property yet. So is this going to be the peak? These are just some concerns. So at the end of the day, the smart ones will be these two bulls over here. I'm not saying that the smart ones are bull right now. I mean just a picture. Okay, I can be some pig, or can be some other people over here, or some other cats and dogs. But what I'm trying to say is that there will be some people who make the logical choice and then they end up on top. And then they'll just look down and look at the people who are just singing songs and not doing anything. They're just sitting by the fence, sitting at the fence, and they're not willing to copy. And this is the number one reason why a lot of people are after 10 years, you ask them, hey, what do you buy? No, last time I never buy it. Because I keep thinking, they keep thinking, last time I want to buy the Sterling Mercedes, and then guess what? It went up there from 1,000, 7,000, it went up to 2,000 plus there. Regret. Then recently I got someone tell me, that time I was looking at Ultra, then why never buy? I also kick myself. So all this happens very often. It happens so often. But it doesn't mean that everything can buy. No, it just means that these people, whether they did real research or not, but some people did a lot of research. But at the end of the day, they just decided, okay, maybe, I'm scared. I think this is too risky, so I don't want. And then 5 years later, 10 years later, look back, that's how I did the research. Actually, I was convinced one, but I never put the money in. Why? So does it sound familiar? But if that is you, then I think we may need to take some time to recalibrate your thoughts, and then think a little bit whether it is actually the right time to make a decision. Okay, whether is it in the next few weeks, in the next few months, I think it really depends on yourself. So that was the end of what we have for today. Common mistakes for buyers to avoid. And if you have any queries and doubts and you feel like you need to clarify them with me, then by all means, let me know. Drop me a text or my cell phone number. If not, then that'll be all we have for today. And then see you guys. Bye-bye.